Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, February 21st, 2024. Almost forgot we had the Monday holiday there. So, second trading day of the week, and a big one, I believe. NVDA's reporting, and obviously they're one of the biggest. I keep referring to them as the poster child of AI. Call what you want. The fact that stock is in most people's radar, that's undisputable, and it also has, of course, besides a huge psychological component to it, bullish psychological, driving, animal spirits. There is also the mathematical weighting in the indexes. So we'll see. That can go either way. I want to again reiterate what I always say when earnings reports coming up on a potential market mover, is that it's not always the initial reaction, and quite often the initial reaction following the earnings report, which is going to come after the close today. I think it's scheduled for around 4:20 p.m., but we'll see. It's sometime after the close. That could be the reaction that sticks, but it often isn't. How you want to trade that is up to you. And I'm going to go over what I'm going to do. Is what I like to do is go through some of the recent comments. And somebody made a mention of the NVIDIA trade, so I'm going to share my thoughts there in this video. But I'm going to start out here and just, again, reiterate, we're still well in my yellow zone on IEF. IEF is a 10-year Treasury bond. It's tracked 7 to 10. It's really tracking the 10-year. And as long as that's in there, what's happened lately reaffirms, what I suspected. This was, given to you before we entered the yellow zone, and then so the stock market certainly, since we enter that, taking note of rising yields, and again, as these, simple color-coded boxes spell out, we'll see if it plays out that way. And again, this is not so much as a prediction that's where we're going here, more so a prediction of what will happen if we do. Hopefully that makes sense. So there it is. There's my trading plan. It kind of AB 101, a simplistic view. There's obviously many more moving parts to it than this, but we could see, for example, and I wanted to also reiterate that we have very long-awaited sell signals. I've talked the bearish talk on the equity markets for quite some time, expecting a new leg down. Nothing's changed. There were some comments to that, but we've also had many long QQQ long entries all year. We have not been, nor have I been short all year, just looking for that turn. And I can't promise this is the one, but I think I can promise you this, that I feel my convictions are strong, that the sell signals that we have had in the last couple of days, particularly with those October trend lines in the markets breaking yesterday, they are, I feel, much stronger that has the potential to be the top, or at the very least, the start of a significant correction. So whether, and again, I can almost assure you that if we happen to, let me jump over here to the markets. I'm talking about that now. So where I was going to go with bonds is, at this point now, the damage has been done. I kind of sometimes I'll use that analogy of like, if you're a trauma surgeon or, nurse who work in the ER, somebody comes in with a gunshot. Sometimes they may appear fine right away, but then the bullet did internal damage. It hit a major artery or whatever, and the patient may not die right away. So that's the thing with these rising rates. And from a bigger perspective, it's the whole lag effect. The market is acting as if, and again, clearly, as if the lag effect no longer is a thing. And it's always been a thing historically. I'm talking about rising interest rates. Rates going from 0 to 5%. In relatively short order. So I'm still a firm believer. It's economics 101, it's financial markets 101, and it's just a matter of how long is it going to take. It does take a while. Now, that's longer term. I'm talking about from when the Fed started raising rates, but more so on the near term is this. This is near term analysis. This is what I do, when I go over, oops, I'm talking, it was IEF. I do mean to get to IEP in a second here, but on the treasuries, so this is kind of near term. Okay, everything else, when you look longer term, yeah, rates have come up. This is the 10-year bond falling on a weekly time frame, with rates going up. Remember, bonds work inversely to rates. And then this is very near term. So now this is the market taking notes. And because the reason I did this way is it represents a psychological shift. There was a vast consensus in the equity market believed that rates were only going to go down. They were going to go down more aggressively. And so far we've seen a trend change, if you will, not a complete trend change, but a shift in the thinking. They were pricing in a near certainty on a March rate cut. That's obviously been mostly removed. Now it's June. The amount of cuts and how much in how many basis points has been reduced, and we'll see. But so here's my takeaway. This coupled with this is much more. I shouldn't say much more important. But this is, let me go to the daily here. And this is what I want to impress upon these this is my clean board. So we had recently one, first sell signal there, and that was short term with a more powerful and significant sell signal come on a break of the primary trend lines. That's happened. Okay. Does NVDA have the chance to foil that breakdown? Yes. Does anything have it? The Fed coming out and saying something, an economic report, or just overwhelming buying pressure from the bulls buying the dip? Yeah, I can sit there all day long and tell you that any breakout of any security at any point in time has a chance of failing. But if I trade that way, then I'll never go anywhere. I'll second guess and never take a buy or sell signal. So I just want to reiterate, this is what I've been waiting for and talking about for a long time, regardless of the longer term bearish speak, where things may be going. This is a sell signal. We didn't have a significant, we had only had a, short term early one there. Some other things that developed. There was that objective, another objective short entry on the gap backfill right there. And now we're well below the trend line at this point in time. So I just wanted to, again, reiterate, this is it. And yes, there's that final kind of, I refer to it, I have to be careful with my words. I'm learning that recently because there's so much out there. Things get twisted, taken. When I call my all-in moment, that's when the last of those sell signals I'm waiting for, which is a break of Tuesday's lows, and you just go to the 60-minute charts and you can look at it. There's QQQ. And that's already taken it out, but I want to see SPY and Meta, and there it is right there, last Tuesday's low, that little candle right there. So the S&P 500 you can see is still above that Tuesday low, as is, and again, this is a 60-minute chart, Meta and Amazon. I have price alerts set for both of them, and it's not just a random arbitrary level. It's good support. You can see here there was that breakaway, what I believe to be an exhaustion gap from Meta, but I can't call it that definitively. Nobody can, and you can only do that in hindsight if it proves to be one, meaning that's pretty much the end or near the end of the run. And so we've been holding that level, and so I think there should be, I would imagine, a lot of stops on long side traders and a lot of nervous or patient short sellers waiting to see that happen. So when that happens, you have a double whammy of long side traders, their stop loss orders getting hit, because objectively that's where you should have it. If you happen to chase this gap and believe that Meta was going to continue to go to the moon and you bought it on the breakout, that's where, again, an objective stop would be. So I'm going to imagine there's a big cluster somewhere in there, not too far below 454. And then again, it's a double whammy because short sellers pile in. Short sellers don't own Meta when they short it. They're borrowing shares, but they're selling those shares, and then they're going to buy them back later at a hopefully, ideally, at a lower price. So, and you know where my price target is, all the way down here. So, doesn't guarantee it'll happen, but it's what I put the highest probability as. And again, it's all about risk reward. So that'd be roughly a 12% drop if 454 is taken out. And so you frame it this way: if you want to short Meta, if you share my mindset, you short it and you have if you're targeting a 12% drop, and again, that's just an initial target where probably buyers will step in, have the first tradable bounce. I'll speak to that again because there's some comments there. You get a tradable bounce. And so if you're targeting 12%, you can use, let's say you want a 3% RR, risk reward ratio. That means you give yourself you short under the break of 454 and you have a 4% stop loss, wherever that is. You can measure it out, be somewhere up in here. So and that's actually resistance. So this is how I trade. I'll look, let's just say, for example, and I didn't even mean to talk much on Meta. I'm just, pressing my NQ shorts. I like the diversity and the leverage and the futures and the round-the-clock trading. And I'll get to that too. Another question in the comment sections I want to reply to in this video. But, with stocks, you can have a gap go against you. You can't control what happens, overnight. There is no real trading in these. I think some brokerage firm was going to start round-the-clock trading, but there's no liquidity. I would tell you stay far away from that. So where I was going is, so that would be for example, a trading plan. If you were eyeing to short Meta for a gap backfill on a break of 454, 12% downside, which would be intersecting. That's a longer term trend line, by the way, that comes in. So it's dual support, very good support level. I'd put a very high probability of a bounce there, at least a tradable reaction. Again, depending on how everything else looks at the time, meaning the other big leaders and, assuming they're coming up or near support and they're looking to bounce in the markets too. But where I was going is, so the way it works like this. So you take that, you say, okay, that's 12% drop, my price target. So I'm going to use roughly like a maybe 3-to-1 RR, so 4%. But if 4% happens to come, I'm going to measure it here. I'm not grabbing it exactly, but let me try to get right. All right, close enough. I'm going to measure, and it's right about, that's 3. Okay, and there's 4 right there. And that works because I put this line here because that's resistance. So the way I would do it, let's just say that even though that's just 3% up there to that 465, 66 level, which is, it's also resistance. It was support here, and then they broke out, it couldn't get through, finally broke out, and it's been back testing that level. And there's also some reactions there. So it's what I call a minor or moderate support level. This is more of a major, very significant support level. But where I was going is if that was the trade and that was my plan, target 12% with a 4% stop, even though that's only 3, let's just say it was 4. My stop would be a little outside of that because I've come to learn over the years the hard and expensive way. I mean, part of what you get from the site is I'm just, right or wrong, I'm going to share, decades of experience. And it's known, these algorithmic trading programs, even in the old days before the algos and the high frequency trading, you had the market makers and they were, kind of a little sneaky, and they would do these things called stop raids too. They would know that all the stops are going to be right there, 465, just above 465, 66. So they buy it, punch it up there, take your shares from you, and then turn around and then short it, and then, so you get your stop clip. So I try to, and again, it's more of an art than a science, place my stops just at a range, because if that's the resistance level everybody's watching and expecting it to reverse on, you got to give it a little room. And one way to do that too is you can either wait for a 60 or 120 minute candle to close above there, or even a daily stop. Obviously the longer you got on the time frame, the more it exposes you to loss potential if this thing continues to run. So I didn't want to spend too much time on Meta, other than just kind of share that, that's, how I, calculate on, where to put stops. And again, it's always first and foremost, you have an objective trade with an objective entry, and then look at your RR, risk reward ratio, and then strategically, I like to strategically, not mechanically place those stops, is what I'm trying to say. I start with the mechanics of using the RR ratio I want on that particular trade, whether it's 2-to-1, 3-to-1, 4-to-1, and then I align that, whatever that percentage loss would be if stopped out, and I want to make sure, in other words, that I don't place that stop loss just shy of a major resistance level that's likely to cap any kickback rallies. Okay, hopefully that makes sense. That's probably a better way to say it. Okay, so Meta still waiting for a break of Tuesday's lows, which is roughly that 454. Amazon, and I just picked these two because those are very noticeable and significant gaps. There's Tuesday's lows, this spike candle right here, and look, there's a good example, and that's why look. There's Tuesday's low. I said it back then as it happened. Look, we came back and tested that. But and the reason why I didn't stick with this level, which is the actual top of the gap, is because we had that reaction low. That was an intra-period punch down there on an opening market imbalance. But it did set a new reaction low, and traders look at that. So look, you can see that's exactly to where we fell for. So if you would have shorted a break of 167.44 and enter the gap, you would have been, either stopped out or at least underwater right now. So, and now that we've tested it again, it further validates that as a significant support level, more so than 167.44, with the top of the gap over there, which has now been violated twice. So that's the level, and that's where I told you I have alerts, and that's what I said last week. Set alerts under Tuesday's lows on Amazon, Meta, SPY, QQQ, and if and when all four of those go, which should be in close proximity, it gives you what I call a high probability sell signal. Not a guaranteed anything, just a high probability. So we're still waiting on that, and unless that comes, especially with NVDA reporting tonight, and the fact that these mega mag 7s or whatever you want to call them have yet to, they're right off, they're in spitting distance of all-time highs. They just punched through. Or not Amazon, I take that back. Amazon still, as you recall, still below its 20. Amazon peaked back in 2021, and I kind of removed it from that mag 7 lineup. But that's, again, call what you want. Mag 5, mag 6. Tesla's certainly not a mag anything anymore, but as I went back a few weeks ago, told you, was of all the mag 7s, I would call them the only one I would buy. I didn't buy it. Said I could have, but I didn't want to. But I expected it would run, and it has. So it's actually outperformed if you look at the performance since that point in time. But it's been stalling out here at that resistance. So again, that wasn't the main point of this video. I want to cover a few more things, and let's do the Q&A thing. Okay, I got a lot of comments and replies I made, so I'm going to zoom in here, and let's just go to this most recent post with 18 comments. I'll try to get to this. It was a suggestion. Sounds like frustration. It's not a day trading site. Never was, never could be. And I never called it a day trading site. You're setting people up for a loss for a number of different reasons. Again, if I haven't made that clear reason, I'll say it again. I will, when market conditions are more conducive to active trading, or I see the opportunities, that's what I do. I lay those in there. Again, I don't refer to them nor to expect them to be day trading ops, just short-term trading ops, active trading ops, I call them, whether it's and those trades the holding periods either going to be anywhere from hours to usually no more than a few days. But take them, don't take them. But I've been really in the last year or so more than ever really trying to be very clear on which opportunities are for active traders and which ones aren't. And I'll even go so far as to say on the same analysis of the same security, swing traders might opt to hold. Like, for example, if you shorted, if you're scaling into shorts, don't try to game these little 5-minute chart, 15-minute chart kickbacks for 1-2%. And I say that, I'm giving general, just kind of how I would trade in wearing either hat, active trader or swing trader. So it's not, individual investment might do this, do that. It's just, hey, ignore this. If you're not an active trader, don't try to game a 1-2% bounce in something. But if you are and you have the time, and then somebody did chime in there and they liked that, idea of avoiding pullbacks. And this is what I wanted to get to too. So anyways, I just want to make that clear. Yeah, it's not a day trading site. And that's what I said in yesterday's video and what I do. I like this comment here. They like the idea of avoiding the pullback and getting a profit cushion after the bounce to re-enter, but they've been burned a lot with the strategy, especially when the market goes lower overnight, and then I'm no longer short if I want back in. So two things. Let me stop there. When the market goes overnight, yes, and that is a thing, and I am not promoting or suggesting anybody trades futures. But over the years, that's where I've migrated more and more, and that's big part of my trading. And that is because you don't have, like I often say, the liquidity. In stocks, you do have that. You are completely open on any individual stock or ETF to the potential of a gap. It could be a very large gap, and as I talk about, it can blow right past even the most well-placed stop loss order. Let's say you buy XYZ here at 100, you're targeting 120, your stop is at 95. But what happens is if you have an opening gap on really bad news and the stock opens at 80, it could actually open at 94, 99. And if you have a stop limit order that says sell at 95, if it hits it but only 95, that doesn't get executed. And it stays open on a stop limit order unless you go back up and cross over to 95. And you can go down to 0 from there, and that 95 stop limit order is still an open order. You're still in the position and you never got out. So you say, okay, well, I'll use a stop loss. That is my preferred of the two if I'm trading stocks. But a stop loss order says trigger, you bought at 100, you have a stop loss at 95 right here. So if the stock crosses below 95, sell me out. And stop loss orders immediately upon triggering that stop price are converted into market orders. So what happens to you there is you bought at 100, you had a stop loss at 95, the stock gaps down to 80 on an overreaction, it opens at 80, that's where they fill you. And guess what? You're in line with everybody else's queued. You have those order imbalances. That's why you can see that huge overreaction, drops to 80, but then the dang thing comes back up and gets up, here, or even continues on up. And you're cursing what happened because they sold you out at 80 for a huge loss, much bigger than you anticipated. So again, there's no way around that. Of the two, I like the stop loss, but again, if you're, every now and then you're going to have a stop or a gap that blows past your stop, and it can really hurt you. Futures, if the futures tank down like that, 3 in the morning, a stop loss order will get hit and filled before it gets all the way down here. And again, not everyone trades futures. So I do get this, and this is why, in these situations, that's why I've been talking about scaling in and, not trying to game the little bounces, because I agree with this. When I trade shares, individual stocks or ETFs or something, I also have had that where, I'm right on the call, and if I try to game a little pullback and then the dang thing gaps away from me the next day, I don't get an objective entry price and I won't chase. So then I end up missing the move. So I agree with that. And again, that's why the easy part is scale in and then define, mainly have a trading plan. If you think, and in this situation, if you're only looking for I'm not looking for a 2-3% pullback in QQQ with the sell signals we just got yesterday with the break of those trend lines. I'm waiting for them to be firmed up, but I'm looking, for a move that's going to measure minimum double digits, right? So there's no point in that trying to pick up nickels in front of a steamroller, trying to game a 1% squiggle, especially if that's your plan on a swing trade for QQQ. Okay, hopefully that makes sense. So, yep, so that's it. Let me just make sure I covered yep. Knight's Bullingoff candle on natural gas. Yep, I'll get to natural gas in a second. And here's someone that likes the active trades. And you look at some of the examples just in the last few days, and, we had silver we hit, and I had the arrows going down. We hit that 2134 target. I believe I posted taking profits there personally, and I even reversed it on SI Silver Futures. But that's a 2%. It's not much, but it's a 2% give back so far. And again, you get up there, you're at resistance, and the risk reward's not great. But again, longer term, now you can buy the pullback. And like I talked about, when you do this recycling, if you sidestep a 2% loss on your long position, and then recycle back in on the pullback to support, which we're at right now, and then you get another thrust up, well, it's 2% loss averted right there, and then you bought at a lower price back in, and you make another 2% to get back up. That's a 4% plus addition to the trade. We were able to do it here too off the first entry to silver. I talked about that. So that's active trading. And again, you're not doing this full time. It's very difficult to do, but it's possible. With all these online brokerage firms, it's super easy to enter an order. So let's say you took profits there. Everything was set in advance. You had a sell limit order to sell at 21.34. If you use interactive brokers, I don't know, other brokers might do this. It's super simple to reverse. I talk about reversing all the time. Reversing is when, I hit a target on a long, let's say, and I expect it to have a reaction. And so if you're long, let's say 500 shares at SLV, you set a order to sell 1,000. You don't have to differentiate like other brokers short sell. You just say sell 1,000. It's going to do the math. If you have 500, it'll sell your 500 out and put you 500 short. And then you have, these, the way I like to trade too. And again, don't want to go from too many tangents here. And I've talked about this many, many times in the past, but it bears repeating. Best thing in trading since sliced bread are these OCO orders. Some brokers call them OCA. It means one cancels the other or one cancels another. And so this is excellent for that person that loves what we're doing here, the active trading, swing trading, but they work a full-time job, or they retired and they want to do this, but they want to golf and fish all day or whatever. So they want to be they'll spend a couple hours in front of the computer, or an hour or so, and get these trade ideas or some. But if you go long here at, let's say, 2107 OCO, you have two orders. All brokers allow them. I've never seen one that hasn't for years now. And if your next price target is, let's say you're swinging all the way up here to that max target up there, potential target 2253. So that's your target. You buy it back in at 21, or you buy it at 21. You're shooting for a 7% return. So you're going to give yourself, let's say, 2%. You're going to have your stop loss down here. It's very simple. An OCO under advanced order types, usually you have a sell limit there to sell your shares, and a stop loss order right here. And what'll happen is whichever the first two is hit, the other will automatically cancel out. So that's a great way to trade. And other than the fact you don't have to be in front of the computer all the time like I am, it gives you that discipline that most traders lack. Even some of the most experienced traders, even at times myself, I'll get a little sloppy in on mental stops and things like that, or pull a hard stop, for whatever reason to give it a little more room. I smell a stop rate, and then boom, your loss is built. So if you set an OCO, it's part of your trading plan. Set it and forget it, and you're either going to be stopped out, and it keeps that discipline for you, or your price target's going to be hit. Because that's the other thing I talk about. A lot of traders talk about sloppy discipline on stops. I've seen it the other way too. You go into a trade, you like it, and you're targeting 2253. Let's just say it's on a high flyer, not just the 7% pop. It's some of the trades I post out here are well into the double digits of profit potential, and you get up 7, 8, 10%, you have that urge to book profit, especially if you've been, had a series of losses recently and you want to book that profit. If you keep doing that, then you're chopping down your RR, and now you're no longer trading with a favorable risk reward ratio. If you're not, if that was a 3-to-1 RR that you took there, but then you took profits half or a third of the way up, but you were still risking had the trade gone against you. Over time, you're gonna most likely not make money, or you're gonna lose money in trading. Okay, and on that, another question was, or a comment actually. That one's just I'm just not crazy about those trend lines. Somebody asked me about the trend line. There's my reply. Somebody, great call on NVDA. I don't know if that's just a kudos or somebody that took it and was happy. So obviously, congrats if you took it and booked profits. I always say this. To me, it's a kiss of death. Never congratulate me or yourself on a profitable trade until you close it out. You trade long enough, you're going to see some things come within spitting distance of your price target. You're all happy and giddy, and boom, they take those away. Paper gains and booked gains are two different things. So anywho, and so I went on to say I wanted to talk about this. So, if you took it and made profits, great. Then you get kudos. If you are still in it, the safe play, obviously, and I just want to reiterate this, if you took NVIDIA, is to close it out before they report tonight. And a more aggressive option is to sit tight and swing for the fences, which is, of course, so far it's only a single digit trade. Let's see, where did I put it out here? It was put out the other day. Oh gosh, was it in anticipation of the breakdown? I think it was before we even broke down. It was right off the high, so give or take, we're up. If you shorted it from where I put it out as a trade idea with that SMCI the other day, you're talking almost 9%. And look, and most of that was just in one day yesterday. You make 9% in a day and you want to book profits, especially in front of earnings. There's absolutely nothing wrong with that. You can just sit patiently and wait once a month and take a trade where you get 9%. And you do that every month, just once a month, you're doing very well. So there's nothing wrong with that. Of course, you're going to have losers in there. When I look at this, what I see now is bear flagging, but it's also earnings coming up. You're going to see some volatility. But again, you can either take the quick buck, and there's nothing wrong with that, or a combination of both. Either take partial profits and have enough that, because it kind of plays into that other comment about, getting out of a position and then overnight it makes a big move and you don't get back in. NVDA is probably going to do that. If I'm going to be right on my top, calling a top on one of the most overowned and overloved stocks, which is effectively what it is. I wouldn't have shorted there. I told you I'm going to take a decent position into earnings. It's, again, I already talked on that. Got plenty of other things to offset it, and enough that I, thing can pop 20%. It's not going to kill me. It'll certainly hurt, but it's not going to kill me. Anywho, the bigger picture is that target right there, which is my initial swing target. I told you there may get a reaction here that's minor support, but so from shorting it a couple days ago, if that target's hit, that's the prize down there. That's about a 32, almost, a little over a 32% drop down to about 501 or so. Obviously cover a hair above it. And keep in mind, if that happens, that's also going to build further evidence for a more lasting top. So this is where I go. I speak in these multiple time frames. I speak to the same trade in different ways to trade it. If that's a swing trader is going to target 500, right? An active trader would have covered already because in front of earnings, take the quick 8% and run, right? A swing trader is going to, potentially, roll the dice and shoot for that 32% drop. Whereas a trend trader now, based on the chart here, would be shooting for some of these longer term. I'm probably going to add some targets. Remember, these are all old targets I had here. At the same time, nobody wanted to hear it. It was dismissed, but I called, these T1, T2, T3. I can't remember if I had T4 then or added that or even T3, but we hit T2. I talked about this. That was a 69% drop then. And so this is where you have a more significant uptrend line. This is, I believe, let me look at something here. Let me put this line up. I have a ascending triangle pattern there, but I have good support right here at about 397. Let me just look at the daily chart. That's how I look at charts. 397. It's about 400. Okay, that's this line. Oh, yeah. Remember my purple lines? Again, for those that, seem to think that I've been short all year or bearish, calling, even though talking the longer term bearish chart, I couldn't have been more clear for weeks and months back here, especially when NVIDIA took off at that point. I was long and bullish and saying that market would not go down. We would not have those long-term targets of mine. We needed to take out these purple lines. And in fact, they were support in which you could also go long, which I also, told you that's what I did. So it's not like I've been short NVIDIA or short the market or anything over that period of time. It was, on the contrary, long off that level. As you can go back there and look at it when Amazon, Microsoft, all the things in the markets all hit these purple key support levels, which now are still very, very important to me. They open the door for a much bigger drop. So that's where I'm going, guys. I'm jumping time frames now. I'm talking short term, intermediate term. We're not going to go down to my long-term targets like that. If I'm right, we're going to go like something like this, right? These are just them with, that 400-ish level, which again shows through. It was the purple lines I had before we even bounced off the last one. And now when you see it here, right here, it's about, again, give or take about 400 right there. And you can see it's where the stock danced for months right there, for nearly half a year. And so I had at the top of that range, that's that initial swing target about 500. So this is kind of on a weekly chart. If you are a trend trader, longer term, this is kind of the path that I see it going. And at this point in time, again, I can all but assure you, if I am short NVIDIA as it falls to 400, I'll be covering it there and going long, as I will at 500. I will not, even on these, I don't want to ride out. When T1 was hit back here, it doesn't look like a lot. When this was my first target from, that high back in 2021, and that first initial reaction off that level, I have to go over here to measure on the line, which is 157-ish. Let me see if I grab that. And that's 158, close enough. That bounce from low to high, I have to keep holding, you can see the pop-up box, was about 24%. Okay, this is why I do active trading. I don't want to ride out a 24% bounce if I feel a bounce is coming if I'm short, even if I'm keeping my eye on the prize, which is a 69% drop. So I will usually when the charts, and you don't see it much here, a reason to go long other than support, which is a big reason. These are big, significant weekly support levels. But then you zoom down to a daily and a 60-minute chart, and you're probably at the same time that happened seeing QQQ, SOXX, Apple, Microsoft, Amazon, any or all of the above, also falling to support, also having divergences on the 60. So I know, guys, I know if your head's spinning, it's a lot of moving parts. This is not, I love what I do. But it's, this isn't stuff you just look at the markets, look at charts for 20 minutes a day, and then you're going to make a successful career actively trading. And if that's not your cup of tea, the active trading, this is where you might say, okay, you know what? I can't handle all those zigs and zags, but I believe, like he does, his stock is going down, and I'm going to target, let's say, this target here. This is definitely a potential target, about 208, and that would be a drop of 70%. Then you'd have to give yourself a pretty wide stop, but I wouldn't even give it too much of a wide stop loss, because look at this chart. And this is where I was going a second ago, guys. So here, let me go back to this. It's kind of like if A equals B, B equals C thing, or not even that. It's if one thing happens, then another. There's an app, you guys might be familiar, IFTT, if this, then that, or yeah, that's it. And it triggers automations, on your phone or smart home or everything. And so if this happens, and we do hit the initial swing target of 500-ish, right? Then what that's going to do, we go to the weekly chart here, that's going to have broken this long-term, more significant primary uptrend line off the 2022 lows right there, triggering a more powerful sell signal. It will also, again, big ifs, guys. NVIDIA may do this after earnings, and I'll talk on this side. I'm not going to give up. I may revisit it 3-6 months from now. But if that happens, we go down there, we have a big red candle on the weekly, or a couple candles to get there, obviously. But that trend line's broken. That's also going to bring this PPO down and give me a bearish PPO crossover and give me what I call confirmed divergence. This is things I've made up over the years. This is what I call potential divergence, because we have right now the PPO and the RSI are making lower lows, but they're still moving up as momentum indicators. So I like to see the PPO line, the blue line, cross down below the white line, the signal line, which effectively puts in a lower peak like it did there on that divergent high. That was confirmed divergence right there when we had the bullish crossover. We had potential divergence. It was confirmed there. And then came that 70% drop in NVIDIA. So that's what I'm talking of all this time about, how, just this one stock, and then the impact that would have, again, to the overall market, to the semiconductor sector, to tech as a whole. And so right now, and I have to say this because I've done this a long time, I see a lot of just almost angry bullishness that almost, is on the site now, just angry that you can even think to go short with this market so bulletproof, it's never going to go down. And I just see beautiful setups. I'm sorry, guys. I see this, same potential I saw back here, possibly even more on the next leg down. So that's it. All right. So let's see how it works. And again, I'll do a follow-up. NVIDIA blows it off the, cover off the ball, I expect them. I don't really have any expectations, but I can tell you these as to what they're going to report. But these big companies do a great job of managing earnings, and they always tend to beat expectations. And I always say it's not the numbers; it's the market's reaction to the numbers, and it's also not the initial reaction. How's the stock trading tomorrow? How's the stock trading at the end of the week and into next week? That's most important to me. So sometimes they'll do a last exhaustion little pop and drop, and you just have to figure out if you want to be in that or not if it does. Or it goes the other way and it gaps down, and then you're like, dang it, I missed it. I don't want to chase it here because the stock gaps down and it's down 20% tomorrow, or 15% or 10 or whatever it is. Next up, UNG. Yeah, I saw it pop yesterday. I posted it in the comment section last Friday. I started taking it, started to look good for a while there. There'd been quite a few requests for updates. I said, look, it's too early. I don't have an opinion. I wouldn't step in yet. And it kept going down, down, down. I mean, I started scaling it a bit early, but it's doing well now. So this is that. You can link it. It'll go there automatically. So this is on Friday now. UNG, natural gas futures. UNG appears ready to pop, in my opinion. Took a very small starter yesterday. Plan to add if and only if it solidly takes out this downtrend line, as well as UNG taking out the downtrend line that comes in slightly above. These are the charts. There's UNG, and it's now above that trend line. You can see my arrow breaks, resistance levels 1572. I'll get to the updated chart in a second. That's Friday's chart. And then this was the futures right here. It started to pop. I've ever so slightly tweaked that trend line. Then this morning, when I gave in that same post I just gave you, go back. Have to go all the way down. Give an updated chart here. We were right at that trend line, so there was that's the sorry, I got a smart speaker going off. That was this morning. So you can see, we broke out. I ever so slightly tweaked the trend line. This is where I started scaling. There was the breakout and running up and hit. And I should have included this. I forgot to leave it out and include it in yesterday's video. I've been so focused on the markets. Let me give you the updated charts now. That's UNG did gap above that level today, took it out. And again, that's what futures, if you trade shares, and you're a UNG trader, you would have had to chase that's a 12% gap up until the open today. Is it object? No, I don't, again, if you're not, and that's also why I take starter positions, just like NVIDIA, just like scaling in the stock markets, because NVIDIA has a potential to gap the market down big like this. And I would rather have a position and risk that going against me, because I think the odds are skewed. There's a bigger chance, I think, of NVIDIA and the markets gapping down tomorrow than I do. And if so, also gapping down big. If the gap up tomorrow, everything's getting stretched. The indicators are rolling over, the momentum indicators, everything else. So I don't see huge upside. I don't see as big of a risk of going home short NVIDIA or the QQQ as I do going home long. I think that's where the bigger risk is. If you had the same amount of position. So there it is. So that's why, futures, again, let me show you the futures and why, this is, but that's a buy signal, but a breakout, I should say. But objectively, if it can pull back to 1572, that was where I had that arrow break. That would be the much more objective entry, or even, it's already done it, a gap backfill. You can see it here. Go to a shorter term chart. Let me give you futures and we'll move on. And there it is. This is the March contract. And what I'm going to do, and I wanted to wait to do this. I was going to do it earlier this morning when I put up that chart. But I'm going to move this trend line for a better fit. There is a lot of momentum. This is what I call Momo-fueled overshoot. Another term I made up, momentum-fueled overshoot. It's when you have a lot of velocity coming into on a long trade or something going up, meaning you're going up very strong and impulsively, almost straight up on high volume, you tend to overshoot. So if that's the resistance level, you tend to overshoot it. Same thing on the downside during a selling climax, just flushing out, and you tend to overshoot a support level briefly. And I use the analogy of a pitcher throwing a 90-plus mile-an-hour fastball, hitting the catcher's glove. The ball does not stop at that point. the catcher's wrist is going to snap back, the glove's going to go back, and then spring forward. And so that's the same kind of analogy I like to use. So what I was going to do, and I'll do it in this video, is take that trend line. I have to move it to activate it here real quick, tweak it. All right, here it is. Now I can grab it. And why did I do that? Because it was bothering. I had to clip this line before that reaction high. I would undercut it, and now it's a better fit. I have clean, distinct reactions, including today's reactions. So the way this works now, you got to pop this trend line, and that's what I said in that comment section. So again, the more two objective entries on a pullback to support right there, 116.86, and or a breakout of the trend line, especially after a little bit. We've had a reaction so far, and then that should take us up to the next targets. All right, and just to wrap up with that whole active trading thing, you saw my arrows yesterday. We hit T2. I told you I sold out just before it, just wanting to kind of focus on the markets more. But there it is. This is why I list multiple targets. That's on the site on the Q&A question. The reason I don't just give those folks on CNBC that come out and give you their price target on something, because I am an active trader, and each of these levels are where the odds for a reaction are elevated. And so you hit T2 yesterday. I had arrows going down from there. I mean, I expected a pullback to at least T1, and it was actually more than that. So now that's where that was the breakout point. You could enter right now if you, and see, so an active trader would have booked profits there, made the, let's just say this is how you did it. Sold at T2, you made 19% on the long, turned around and shorted it. Probably would have been more prudent to cover at T1, or, when you short or go long, trailing stops are great. That's another thing besides the OCO orders I love. So a trailing stop will keep you in a trade and allow you. And so what I'll often do is when you get to the target, if I decide to trail stops because I think there may be more, set a stop right there and either manually ratchet that stop down if the trade keeps going, or just have it automatically trail down, which your broker can do for you. But now we pulled back all the way there. So again, if you took profits yesterday, you were able to sidestep a 17% get back, actually all the profits right there. And then again, you could recycle back in, or you could have shorted the pullback. I didn't, but again, because I was out of it. But I'm just showing you that's why, you trade long enough, it never fails to amaze me how many of these trades hit these targets almost to the penny, sometimes the exact penny, and then reverse. So sometimes they will go through one. And you don't get a reaction. And again, the 60-minute charts usually are the best guide for that, whether you're going to get a reaction or not. This is a 60-minute chart. So if you look at IEP, when we hit that target yesterday, you got it negative divergence. That's your divergence right there. So that would have been a reason to expect at least a pullback. There's that uptrend line off the lows I just showed you. So this is an objective long. You'll probably bounce up here. If I was actively trading this stock today, I would have took a long there, covered a short if I was still in it, let's just say. And I'd look at this gap right here. There's the top of it, and there's the bottom. And so, you can do this all day long. In fact, anyways, called a zone, but it'll probably bounce up to 2028 and then have another pullback. And then if I was in it and trading this one actively, at most, that would have been my last trade for the day. I'd have a sell order there, I'd be trailing it up and be out, and then let the dust settle. After a big move like this, big up and then a big down, there's probably some news headline. By the way, I moved the earnings date. I checked it again. I just want to make sure they didn't report today. Earlier, in earnings.com had told me back when I put the trade out there that it was the February 28th. But today when I checked, it says they report on March 1st. Whether that's accurate or not, like I said, you can check the company's website. You want to be sure. So maybe they did report early and earnings.com has it wrong. Or maybe there was something else. A long video, but I only had one more I replied to in that same thread. Yep, that's it. Somebody brought this up. Have you seen Lunar? They're sending some test equipment to the moon. So blah, blah, blah. Stock is up over 300% in the last month. Chart's going parabolic. Could be buy the rumor and sell the news. Yeah, no, I agree. I said, I wonder if NVDA is part of the cargo on that trip to the moon. LOL. I wasn't aware of Lunar, but I'll put on my radar to watch. Could be a buy the rumor, sell the news trade, but I have to do some due diligence to see what the fundamental story looks like. So when I see a company running like that, it could be justified. Maybe they just got a big contract with NASA that wasn't announced before or priced in, or something else, or rumors that, Blue Origins or SpaceX is going to buy them or something, Tesla. So I would never just assume that that's a buy the rumor, sell the news. But looking at the chart, as I said, would be my guess. And my reasoning is that the stock was in a big downtrend until January. And I think it's very safe to say they didn't just whip together plans for a trip to the moon in a few weeks. And so here we'll look at that one. And this is just no trade for me. Also just watch LU. What was it? LUNR. Yeah, that's it. And you can see there. So, the markets are very efficient. And so, again, like I said, this thing just started taking off in the beginning of the year. That's when everybody started their, again, these all this hype in the market right now. I'm seeing a lot of speculative, low-priced stuff go up and even big caps, but that are grossly overvalued. And there's just fundamentals have been thrown out the door right now. So, again, if they, this trip, any trip to the moon is going to be planned well in advance. So usually those in the know would have been buying the stock. So this is probably just retail traders reading the headline. And yes, that's a parabolic move. And so far, today, big reversal in the stock. There's not enough price history for me to chart it. And again, I'd have to look at the news, read the headlines, look at the fundamentals. But now you have a nice distinct reaction right here. Again, I'm not touching this one. I just wanted to kind of share that just eyeballing this chart, that's most likely retail traders, speculative frenzy getting in there. Again, unless there is some bona fide fundamental catalyst that was unknown, because the market is pretty smart and efficient at sniffing out good companies before. Like I said, this wasn't just planned yesterday. Okay, guys, I'm going to stop it here, get the video out to you guys, reiterate, we do have those sell signals in the market, with the last and final ones close, but not there yet. And NVIDIA has the chance to make or break that. And so, in my opinion, it's favorable to have at least, some short exposure now because of the recent sell signals. As a typical swing trader, best to wait to add on when we get those final sell signals I'm looking for on breaks below Tuesday's lows on the indexes, as well as Meta and Amazon. And if we don't get it, then we wouldn't add. And at that point, if the market starts going up, then your concern and mine will be where to stop out. And so, trading plan to me is flexible, especially when scaling in. Also another, by the way, let me just flip this around one more way. I just said, the next objective short or sell signal come on a break of those Tuesday lows. But another objective short entry would be, let's say NVIDIA has an initial pop and it takes QQQ up here for a back test of the trend line. Well, that's a potential scenario too. You also have the gap resistance right there we stopped at. So there's dual resistance right there. And so that would also be an objective short entry with a stop somewhat above, especially on a daily closing basis above the uptrend line. Okay, guys, long video, but I wanted to get it all out to you today. Again, I think there's the potential for a lot of potential right now on the markets on the short side if these things come together. This has been Randy Finney with Right Side of the Chart. Have a great day.